I spent the last 23 minutes recording the week ahead video, only to realize after recording that I was using the wrong microphone the whole time. So this is essentially inaudible and useless. So let's try and do this again. Good morning. This is the week ahead video for the fourth and last week of the month of February 2024. So as we do, we start off with the dollar index, and I will be starting off with the weekly chart. We can clearly see that we still have the same annotations that we've had on our charts from essentially when the year started. So we got a tap off again from this monthly buy side imbalance, sell side inefficiency, which is right there, this monthly BC, and we rejected off of it a few times already, but now we did the same on the month of December 2023 right there. So doing this and coming off of this weekly inversion fair value gap, refusing to close below the weekly inversion as well, violating higher time frame PDRAs like this weekly CB that has now become an inversion, as well as violating swing highs that's being created along the way, is confirming bullish prices for me. If I was a swing trader or a position trader or somebody waiting for confirmation, I would have been waiting for two things. I would have been looking for bearish wicks so I can buy it up, or I'd be looking for swing lows that's higher than the previous swing low. So we've got the swing low right here, but looking at each candle, we never actually created a swing low again since this one. And now we have the possibility of creating a swing low depending on how next week's candle closes. So in other words, we do not want to see next week candle closing below or trading below last week's low, because that would initiate another 3 days wait or 2 extra days wait to see if we could create a swing low. So personally, I would like to see a candle from the weekly perspective that looks something like this, as a bullish candle, and still doesn't trade below the weekly buy side imbalance, sell side inefficiency, this tiny weekly BC right there. So this would do two things. One, it would make the drawn liquidity clear, which would be the swing high. Two, it would promote my higher time frame or longer term perspective on the dollar index, which is this buy side liquidity residing up there. And three, it would confirm and make the trading month of March easier to work with. The direction becomes easier to trade. So that's what I want to see from the weekly perspective of the dollar index. I mentioned that there are two reasons you could enter a trade from a high time frame perspective, and I said that the first one would be that you'll be waiting for a swing low or down days. Notice how here we had a down day form, but at the same time we had this weekly sell side imbalance. So what could have said that we do not just, there's nothing that was stopping price action from essentially trading up into this CB and rejecting lower to continue this selling trend that we've initiated already from the later portion of the year last year. So this is why not only waiting for down days to buy up, because I could have seen this down day and decided to buy the next day, which would promote my bullish directional bias right now. But back then it would not have been a confirmation for higher prices yet, because anything could have still happened and we could have possibly continued trading lower. So now that we violated it, this is when I would have been waiting for that swing low to form. In other words, it would have been nice at this point to see if we could create a candle that leaves a fair value gap right here, because we would now know that the next time we trade here, this would be a confirmed swing low into the weekly inversion and the BC that's being formed in here. But of course, that's not how price played out, and we didn't get that. But we did get a bounce from the inversion, and now we're waiting to see if we'd finally get this the higher swing low that we've been anticipating. This next week might also be a small body week. You might get a candle not expand to the downside or upside. So I'm essentially saying that I'm not going to touch the dollar index this week. Let's go down to the daily perspective. Let's use this. On my latest video, literally the video before this one, I did a very quick review of what has happened last week, and we can see from the daily perspective that we did trade lower, but it was just to get to the equilibrium point for the month of February. So noting when the month opened in February, you would see that only 2 days we actually got price offering a discounted level. In other words, anything below this blue line is discount, anything above is premium. So from the first 2 days of the month, we had discounted levels to take the dollar to take the dollar back up. But now, for the first time after so long, we actually now got a dip down into the equilibrium and below the equilibrium, which gave us the discounted prices that we might be looking for to take the dollar back to the upside. The problem now is that on the daily time frame, yes, we got a liquidity sweep. Yes, we also got a shift in structure by trading lower, but we did not close below any swing low on the daily perspective. But we did get this BC fail. So now bullish PDRAs are now becoming support or acting as resistance for lower prices. Note also how we traded into this volume imbalance, picked into it, and then this started the fall off from there. The last thing that worries me about the dollar index right now from the daily perspective is the fact that we also created a lower swing high. If you remember on the weekly perspective, I was mentioning how I wanted to see a higher swing low to support my bullish perspective, my bullish draw and bias. We already got a confirmation on the daily time frame for bearishness on the dollar index. So in other words, I'm not going to touch the dollar index until or unless we get a raid of this buy side liquidity. So if we sweep this buy side liquidity, then I would consider this push to equilibrium to be just a turtle soup, which also traded into this order block, wick to body. That's our bullish order block. So I'd consider this to be a reaction that's significant that could see higher prices. So even without waiting for the weekly candle to close, trading above this swing high or trading to this swing high would confirm bullish prices for me personally. Then I would look for lower time frame entries to continue taking the dollar to the upside. So moving on now to the Euro USD. Because of the same reason that we have from the dollar index, note how we just violated this bearish PDRA, this CB right here. We've closed above it, and now we are basically back into the dealing range from the month of January. So I'm basically at a 50-50 area where I don't wish to do anything right now, but I'm still favoring sell side liquidities to be purged from the weekly perspective. The daily, again, as I already pointed out in my last video before this one, we have also traded to the equilibrium level for the month of February. We actually traded way deeper into it. So now the question now becomes, is this a turtle soup or is this a directional change? Because we are now violating bearish PDRAs, we are taking previous swing highs, raising previous swing highs. So is this a continuation to the upside, or was this all just a fluke and it was just a turtle soup? If it is a turtle soup, we would like to see a confirmation by us sweeping a swing low. And we can clearly see that we have this swing low right here. This low is 1.07618, while this one is 1.07620. So in other words, this low is lower than this one, which makes this a swing low, because this one is clearly higher than this one as well. So I would like to see if we could purge this low in order to confirm bearish signatures on Euro USD. Other than that, I'm not going to touch the euro until we get a confirmation. So let's just skip ahead and jump to USDJPY. I'm not going to bother checking GBP USD because it's basically one huge mess right now. Moving to USDJPY, we have this same PD array that we've been looking at for so long. Let's actually zoom out a little bit. From the daily perspective, I've already mentioned how that's my draw on liquidity, because that's the all-time high, and no, I don't believe it's that actually. Yeah, it's this one that's the all-time high, but it's close to the all-time high. So any liquidity residing above that is basically the all-time high to me. And this is a clear market maker buy model that's been portrayed the last few weeks. We have just now been inside of this dealing range. So measuring this candle from Tuesday the 13th of February, we have not taken the high of this candle and we've not taken the low of this candle. We've gotten close to it on Friday, but notice how the candle closed essentially where we opened for the week, for the day. So it's still a bit indecisive here, but this is obvious because of the dollar index pushing lower on Thursday. But one thing I do like still is that besides all the movements that we've been having, we have not closed below the consequent encroachment of this daily buy-side imbalance. We've also now closed above the PD array itself. We've closed above this BC residing here from the daily perspective, and we just came down on Friday to tap into that BC one more time, making the low of day and closing where we opened at equilibrium. So next week, actually from Monday, I'm expecting an expansion from here to the upside. I'm expecting us to continue trading higher, but I'm not going to blindly enter enter this position. I'd rather wait for a kill zone during the day, during Asia and London or New York, to take USDJPY to the upside. So yes, I am still bullish on the dollar, but I already mentioned how I'm waiting for confirmation for me to trade other pairs. But for USDJPY, I'm still supporting bullishness on this pair. So what am I going to be focusing on? Well, I'm going to remain on the sidelines until I get a confirmation to buy UJ, but I will be looking at the indices. I'll be paying a little bit more attention to the NASDAQ, specifically NASDAQ and not S&P 500 this week. And I'm not going to look at the high time frame. I'm going to start off with the 4-hour chart. So on the 4-hour chart, we got an expansion to the upside from the, I think there was the data report being released on NVIDIA on Wednesday. So we got an expansion and a continuation to the upside, right? Clearing the all-time high one more time. So we got a sweeping liquidity, but now for me to confirm this to be a soup, a turtle soup, well, firstly, we obviously got our sweeping liquidity. That's our first point on the checklist. The second point would be a violation of a previous swing low, which we just did, and we closed below that swing low, which we did, making this a confirmed market structure shift. So we got that. And now we have also now started disrespecting bullish PD arrays. We traded into this BC, but now we've closed below it, making this an inversion fair value gap. So there's a chance that we could see the high of week form inside of this inversion. But am I bearish? Does that mean that I'm bearish on the indices and I'm willing to sell it all the way to the oblivion? No, I'm not doing that. I'm just measuring the data release of NVIDIA from the swing low. Let's actually do this properly. Yeah, measuring the range from the swing. Let's We don't need all these lines on our charts. From the swing high there on Friday to the swing low that we made on Wednesday. We can see the halfway point of this dealing range is basically there at 17758.75. That is my drawn liquidity. I'm not looking for anything lower. We might continue lower, but I'm not looking for anything until we get a confirmation from the daily perspective, or better yet, we'll just wait for the weekly confirmation, which is much solid for me than anything. But besides this, I'm not looking for anything on the NASDAQ. If we trade above this inversion, I would pay attention to the order block right here, because this now becomes a high probability order block for me. We could trade to the low of this exact candle from 6 o'clock on Friday. We could trade higher up into it and continue lower. So that's my view on the indices. I'm not looking for anything below the 50% of this dealing range. The last one that I'm paying attention to, that I will be paying attention to going into the week ahead, is an exotic pair, a cross pair, which is AUD with the Swiss franc. So AUDCHF. I'm paying attention to the fact that we just traded into this weekly CB, but does it mean that we just sell every weekly CB that we see, any weekly fair value gap we see? Of course not, we don't do that. We could see price even trade lower, trade into this BC. Why not this BC and then continue higher? It could, it very much could, but I'm not looking at that. I'm paying attention to this CB because of one thing. We have an SMT with a correlated pair, right? In other words, paying attention to this pair, we have AUDCHF. The only pair that I know that's closely related to the Australian dollar is the New Zealand dollar. So if we can pull up the New Zealand dollar, we can see that there is a clear SMT divergence. Firstly, we violated the same CB that we're paying attention to right there. We even traded to it and used it as an expansion to the upside, clearing this buy side liquidity and this buy side liquidity, violating this massive CB residing right there, because we've now closed above it. So I'm looking at the fact that we have an SMT divergence between this swing high from the 11th of December to this high that we just created now on Friday. Last week. We created I don't know when we created the high last week, but we created a high inside of this. So we have an SMT divergence happening in a PDRA, especially a high time frame PDRA. So I'm expecting some measure of move to the downside from here because of this idea. But I'm not going to blindly enter from the weekly perspective, set my stop loss at the CB high, then aim for the lows, because we have equal body candles acting as liquidity right there. Equal body candle lows. So in other words, I could have this setup. That's the high of the fair value gap, the high of the candle that created the fair value gap, and I could be targeting these lows for a simple 2.61 R&R trade. I'm not going to do that. I'm going to wait for a shift in structure from a lower time frame perspective. So let's move to the daily time frame. On the daily chart, we can see the same thing that we talked about throughout this video. We have traded above equilibrium by a lot. So the month opened, we swept this low, this sell side liquidity. For 4 days, we remained below the opening price, which is our equilibrium level, and then we started shooting higher from there. We created a swing low, a higher swing low, which is what I'm waiting for on the dollar index from a weekly perspective, and we created this higher swing low inside of a BC. So if you are not confident about taking this buy, you then wait for a down day to form. This is a down day. Us trading into this BC was a down day, so blindly buying the next day will be following the plan of a bullish price action. If you do not buy the next day and you wanted to see if you get this swing low to be confirmed, that's also fine, because later on, when it's confirmed, the next candle trades lower into this as an order block. into this down day as another block and then continued expanding higher to clear the 20 days high. So now we have now traded into the weekly CB, which I will highlight now because I wanted to note the fact that we have now traded to the consequent encroachment of the weekly CB at that point, which is the dotted line. So we got near it on Tuesday, then on Friday we now cleared that buy side liquidity, that swing high. So I put a total soup thing there with a question mark because I'm not sure if that's a total soup or not yet, and what would validate my idea now for bearish prices. Well, firstly, we've swept a previous swing high, a previous liquidity. So now I'm waiting for a previous swing low to be swept in order to confirm my bearish directional bias, especially having that SMT in a weekly PDRA. So taking this swing low will give us a possible market structure shift and would also now make this candle to become a bearish order block. So we could find us trading into this candle, making the high of next month probably, or even from this month, who knows. Then continue trading lower to at least equilibrium, then the sell side liquidity residing at the 20 days low. So that's what I'm looking for on AUD CAD. We can go down to the 4-hour perspective and we would notice that yes, we have had a total soup, we've gotten a sweeping liquidity, but we haven't confirmed the directional bias yet on a 4-hour perspective, which is going to be my entry time frame, by the way. So right now we are still supporting bullish prices. We still have this BC that's being supported for higher prices. We also have a red folder event on Tuesday on AUD. So we could see Tuesday possibly shooting us up one more time to have one more liquidity sweep before we get the shift in structure that we are looking for. But if we do not get that on Tuesday, if we just open on Monday and continue trading higher from Monday, maybe chop around, then Tuesday we make a high of week, and then the news is the one to give us the market structure shift. I'm still fine with that idea because I'm just looking for a swing high that's been formed and a swing low that I can use to measure. Because if we can take that swing point to that swing point, I will be hunting an entry from the equilibrium level of the dealing range. So in other words, I'll be looking for equilibrium or premium to take the sell and ride it all the way down. Yes, we have that sell side liquidity from when the month opened, but I'm looking for the equal body lows, which is beyond that. So this is my plan, my setup for the week ahead on AUD Swiss. So I'll be paying attention to AUD Swiss and the NASDAQ and possibly UJ going into next week. But for now, stay safe, good luck, and good trading.